GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. So we had some interesting moves last week. A 5-month high for gold, silver also breaking out too, pretty interesting. Not so good for oil. Oil's pulled back, it's down around the lowest in about 3 weeks, I think. It was down for a second week in a row, pushing into its third week this week. 16-month low for the euro dollar, so obviously some dollar strength coming in, and the big news item of last week was that US inflation, that's the US CPI, hit its highest in 30 years since 1990. So obviously really high inflation, rising bets that maybe the Fed will have to taper quicker than they've said so far, maybe have to raise rates even next year. And so that's creating some dollar strength, but also inflation concerns. So that's those typical inflation hedges like gold and silver are working too. So interesting market, some good trends taking place. So I'll cover those now. Anything else you want me to cover in these videos, drop a comment in the comments on YouTube or Facebook or wherever you're watching this. And we can respond to those comments and adjust the content accordingly. Always appreciate that feedback. Otherwise, please just click that thumbs up button. Right, so let's start with the euro dollar. I'm zoomed out here to the weekly candlestick chart, and the only reason I really wanted to do that was just to show that obviously we're in a downtrend. We've been in a downtrend for a while, so selling has been the best option in this currency pair for a number of weeks based on the trend. But we are running into potentially a very interesting level of former resistance turned support from these series of highs through here. And I've also drawn a Fibonacci retracement on the chart just because you can see actually the 38.2% and the 50% retracement levels have created some reaction in the price. And so we could think that actually if we were to get down to the 61.8% retracement, maybe we make it through this form of resistance, because it's more of a zone. You know, this is a long-term phenomenon, so it's more of a zone around 114. If we were to come down to test 61.8, maybe that would create the reaction too, because you've got to say that so far with this major potential support drawn in, last week was a pretty big down week, as I say, a 16-month low for this currency pair, and we closed right at the lows, and that's normally pretty bearish. You know, you want to see some kind of tail coming in to show that buyers came in, but really no sign that buyers came in last week. The price just ended the week at its lowest levels, basically. So that would suggest that lower prices are eventually to come, and so that maybe that means we get through this level. I would say maybe it's better drawn as a zone. Which you know I do a lot in my charts anyway, and so maybe it's better drawn as something like this, and then obviously that takes us pretty close to that 61.8. So what are we saying here? Overall downtrend, but potentially some big support coming in from these fibs and old resistance on a weekly chart. Now if we duck down to our 4-hour chart, we can see the big down move last week. You can see it took out this zone of support here. If we were to get a rebound towards firstly 15 as the round number, and then that old support turned resistance, that would also coincide with the 50 period moving average on the 4-hour chart. That could be an interesting area to, if we've sold off this heavily and we get a bit of a decent bounce, maybe that could be an area to re-enter the downtrend. If we were to unwind all of this sharp move from last week, that would take us back up towards the 20-day moving average up here. And, this, for me, when we took out these lows with some good strength here, this is probably the key supply area to be looking out for, and that's around 115.70, 75. So if we did get some bounce, you'd be able to sell into this short-term trend. Otherwise, you could see these long-term areas of support coming in just below. So if we do just roll over again, let's see if we get some kind of stronger reaction from basically 114 is the kind of key level we were looking at on that weekly chart. If we dip into 114 and see a really violent reaction higher, that could be a sign that maybe the bottom's coming in. Let's move over to the British pound. Let's go to that weekly chart there too, because I've also drawn a Fibonacci in, and you can see that the pound has been respecting the 38.2% Fibo. It broke through it on an intra-week basis last week. But interestingly, it's come in, and again, more of a zone than a single price. But if I zoom out a bit here, you can see through these series of old peaks, this was resistance, 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 some kind of false break, but with the closing basis was really through there, and that's what we're challenging at the moment. So I got to imagine that if we do get through this 38.2% Fibonacci retracement, which I've drawn starting really when the rally got going, after this kind of flash crash moment, then I think that would be significant. You know, that was obviously pretty major resistance. Now it's major support. If it gives way, I tend to think, you know, we have a pretty decent pullback. The next obvious level I've drawn in here would be the 50% retracement level with these two lows down here. You could get a bit of an interim bounce off there, but probably we head all the way down to 130. If the current level gives way, that to me would suggest we're heading back down to 130, just because it's been such a significant level in the past. So I think that's where people have been trying to buy in, but obviously we bought in once, made a lower high, so that wasn't a good sign. Now we're really testing the level below the 38.2, so it's looking like we're probably going to break it, but so far holding above the 30 level on the RSI on the daily basis, and we're just sort of consolidating in a kind of downward fashion. So the pound has not been nearly as weak as the euro. That's because, in my view at least, that's because the Bank of England looked like, even though they didn't hike rates at the meeting this month, there's still a fairly good chance that they hike rates at the meeting next month in December. And that's a different story to the ECB, which are still not looking at even tapering until March next year. So that's the situation there. You know, on a short-term basis, you can see we've bumped into this major support, but I haven't really seen any particular. What you want to see is more of a stronger reaction. If this longer-term support was really going to work, you'd want to see the price really pushing up through these short-term levels of support and resistance. But actually, it's just kind of trundled up to it and rolled over from it. So until we saw some kind of big move up, maybe to 135, there's not really any particular evidence that a bottom is coming in yet for the pound. So, you know, overall still on a daily basis choppy, but on a 4-hourly basis a pretty strong downtrend that doesn't really look like any particular sign it's going to end just yet. The only thing would be that we've got this big long-term level coming in. So if we see some reaction on a short-term basis to this big long-term level, then those two things combined can create the opportunity for a trade to go long the market. But at the moment we've got the long-term level, but we just don't have that short-term reaction really evident yet. It looks more like the level's going to break. Moving on to dollar yen. Big picture is that we're still looking pretty bullish in dollar yen. I keep referring to this weekly chart because we've got a major resistance through here, and that's what we've been consolidating beneath. Now this weekly chart looks really interesting because look, we're in this trading range, and this is what we've kind of been talking about, like a flag. Big move up and then a kind of consolidation in a rectangle. And look at this, tried to break lower, but just came straight back into the range and closed quite in the upper end of the range. Not the top of the range, but the upper end, above the middle. This to me, you know, maybe it's not the end of the story yet. We're only talking about 4 weeks, but this is interesting. It's pretty bullish in my view. That we tried to break down, failed to do so. May get a similar thing on the top. That's entirely possible, but to me, this would indicate we're going to have a challenge at the top of the range and maybe a breakout. And that would obviously be in line with the overall bullish dollar trend. And, you know, we didn't hear anything particularly special from the Bank of Japan. So again, it's that central bank story. Looks like the inflation might push the Fed to tighten quicker in the Bank of Japan, and aren't really in the same ballpark just yet. They're not looking really at tapering or raising rates. So that's that big bullish engulfing candle you can see on the daily chart, which was the false breakout on the weekly chart. So to me, that's pretty bullish. But now, it was a big long candle, so people not taking any action after the candle. Maybe we get a bit of a drift lower into the range, and I suspect that might catch some interest. And it looks like we're going to get a breakout through the top of the range, and that would be in line with the overall trend. Moving over to precious metals. As I mentioned, it was a really good week for gold. This was the this was the resistance we've had on the charts for a while here, right through 1830, and we got the breakout of 1830, and now we're just challenging. Best viewed on the zoomed out daily chart. This trend line coming through with a 1, 2, and a third test, and now we're in the midst of the fourth test now. We've hit overbought levels, so testing a trend line plus overbought could offer an opportunity to sell, but I would just say that if you're going to do that, you probably would have done that 3 days ago when we first got the test. We got a sell off, we got a bounce, then we got another sell off, and now we're back at the highs again. So, of course, we could have a bit of back and forths and eventually drop. But the momentum is to the top side, and having broken through this resistance, to me, I think the most likely result is a break of the trend line, and we actually go up and test the 1900 level. It's kind of the supply from these two peaks up here, and obviously it's the big round number. And then the high above there is actually more like 1915 if we were going to round it off. So 1915 the high, but 1900 the round number if we break above this declining trend line, which to me it looks like we do. If we don't, and actually we do roll over, well then this previous resistance would be a pretty logical area of support. So that's 18, it's a zone between 1830 and 1835. You could call it 1833. So a few different ways to play this, in my view. People have been buying it off the bottom in this kind of short-term trend for now, off the short-term range. Sorry. You can wait for the deeper drop to the previous resistance, the longer-term resistance at 1830. If 1830 gives way, it's not necessarily the game over completely. I think actually 1810 or thereabouts, which was a resistance over the short term here, that could also offer some support and would still be above the 20-day moving average. So looks to me like probably we just break out straight away from here, and you could trade, and you can make a breakout trade through 1870 with the hopes of a move up to 1900. Or you can wait for the pullback towards the old resistance in hopes that it works as support. Now, silver, very much a similar beast, and we've been talking about this for a while. We've had the downtrend line down through there that broke, ages ago. We talked about the run up to the resistance, the pullback that it held on to. When we talked about this daily morning star pattern when it happened. As a bullish sign. So we've been all over this, and now silver looking really good over the 25 level, breaking out, and not even just that, but it's broken out, retested the level twice. Now we could still obviously break back down through the resistance. Nothing's impossible in markets, but it looks like it's holding the level after 2 retests. And moving up to potentially test, this would be a little bit of a troublesome area. I think look at how many, daily closes held up the price there. And then actually when it dropped through it, eventually it came up for the retest, a little bit of a false move up to 26. So maybe that would be the source of a slightly deeper pullback up at 25.70. But the fact that we've just broken through this resistance at 24-ish, 70, similar thing, 24.80, would suggest up to me that we probably don't move much below there. So trending higher here and just looking at some areas of resistance and support to kind of trade in and out of it. But it looks like the trend has changed for the positive in precious metals overall. Switching gears to WTI crude. So this is the daily chart, and you can see that we topped out at 85, and then we've been struggling around 80. We're back below 80 as of the start of the new week. And to me, it looks like this pullback could go a little bit deeper, could actually head down towards 75. The major resistance, now possible support, is from the old record, not old record high, a previous multi-month high, let's say it like that, in this year, was back at 76 and changed to about 76.40. And then, we tested it, pulled back, and then eventually broke it, had a little bit of a kind of model here, rallied up. So that'd be kind of a neat bit of technical analysis, I think, if we rallied up through the old high and then pulled back, tested it, and would still be above the, like the 100 period moving average, above the 50 period moving averages here. So it would still be, it's still overall there's an uptrend, but it's maybe just a slightly deeper pullback, something like that to buy a dip into. So oil still looking soft. It could hold the support here. I mean, if it just tested this low at 77.50 and bounced perfectly off the 50-day moving average and rallied up, I mean, that's entirely possible. Just a slightly better entry point would be lower at 76.50. But if you see a decent reaction on shorter term charts off 77.50, well, there's two areas of potential support why that might hold up, and why that might just be the bottom of the trading range that we're dealing with here. So overall, oil still positive, and we're just looking for kind of maybe better entry points, because it still seems like we're in a kind of pullback mode. Looking at the S&P 500, obviously had a strong finish to the week, just shy of record highs. I've mentioned a few different times that there's options to try and sell at the high. It's not been a good strategy trying to sell at the high. The risk to reward is obviously fantastic given how high these markets are going, but they just keep making record highs. So selling has just been a way to make lots of small losses and never get that big win. So what to do? Probably best to stick with the trend. Short term, this is what we're dealing with. With these, I had highlighted this last week, got a nice little prick down by it, went sideways for ages, and then just popped at the end of the week. Tech shares did quite well, and it sort of looks like we're out of this small slump now. However you want to kind of define it, there was a bit of a kind of maybe a trend line through here. Looks like we popped above it, and so uptrend looks like it's continuing. Comfortable uptrend in place. It's clearly it was overbought on an RSI basis in the short term. Now it's not. So there's some room to move up to the upside again, based on the short term momentum indicators. Longer term momentum indicators had been overbought, came down. Now they're not. So again, room to move into overbought territory again. It's all telling us that it's a bullish market. And it's just at some point, obviously, it corrects in a deeper way. But trying to time that it's fine, but it's not necessarily a way to come away with more profitable trades than losing trades. Trying to pick the top is tricky. So we're just saying that the top is going to come in place at some point, but at the moment the market looks very good. Bitcoin I can be a bit more definitive about, because I think there's an interesting possibility here that just like we saw, so we had the big dip in May, and we based out for a while, then we broke out of the base, and then we had a pretty interesting setup where there was some RSI divergence, momentum divergence, where price made a new high, then made a bearish engulfing candlestick, while momentum via the RSI made lower highs. And we've got a similar setup here. Price made a new high, followed by the bearish engulfing candlestick on a daily chart, and the RSI made a lower high. So this potentially is a counter trend divergent setup here, potentially to sell Bitcoin here under the 70k mark, on the bet that this RSI works out. Now, the one that I would say a risk factor here is actually, if you notice that if you start at this RSI, This time around, that's the trouble with these divergence trades. Oftentimes the first couple of attempts at the trade don't work. So that's why you have to kind of be a bit vigilant. If you drew this line like this, right, actually there was probably 1, 2, 3, 4 times where the price made new high, a new high, a new high, and then a third new high before it eventually dropped down. So what we could end up seeing is actually the price does rally up, you know, maybe up to, who knows, could even get to 71,000 and then make a higher high and maybe stop you out of any short trades and then roll over from there. So if you are going to play this divergence trade, you know, just like any trading strategy, just be aware that your first attempt might be a losing trade. But it's not to say the strategy is wrong. If you're willing to trade a third, even a fourth attempt at divergence here, the eventual winning trade could play out nicely. You know, of course it may not, but this is just I think, given that we've been struggling at the 65,000 level, the record high made in April, and the previous success of this divergence, maybe it can work again. This is just something to look at, and obviously if you blast up through into 72,000 maybe, and the market resumes its bullish trend, okay, so you know, back to the drawing board. But for the moment, potentially a bearish divergence setup here in Bitcoin. Okay, I'm going to leave it there. Thank you very much for watching, everyone. Good luck trading this week. Make sure to subscribe to our videos so you don't miss them when they come out. And thanks for watching again. See you at the same time next week.